All right, all right. What's up? What's up, Brian? What's up, Ab? Y'all can speak if y'all want to.
Can you hear me?
Yep, can hear you.
Hey, Caesar.
Hey, hey.
Awesome.
What's going on? How are y'all today?
Good. So good to see you doing this session, and so thankful to you.
Thank
I
you,
really
thank you.
appreciate this.
Appreciate that. Let's see, we got a few more people joining. Give it another minute.
Hi, Caesar.
Hey, hey, what's up, Charlie Queen? How you doing? Let's see. Zoom. Paste. Got you, got you. All right. All right. All right. So that's about, all right, 2 minutes has passed, so I'll go right to it. Feel free to ask any questions at any given moment. I am going to allow you guys to be able to share your screens in case there's something when it comes to your charting you're not quite getting right. So feel free to ask any questions. If you guys want to share your screen, you can. For this, you guys are still watching through Tradecaster or the Zoom? Hello?
I'm watching through both right now.
All right, so I'll share my screen. So in the event that if any of you guys want to share your screen, just feel free to let me know, and then I'll get to it. You can request sharing, and I'll grant it. All right. So first thing, let me see. Okay, adding. So first thing I want to go over is just straight up chart analysis and why is it I was expecting for the beginning of the year for the market to sell off. For those of you guys that may not understand market psychology, is when the market runs up for a certain duration, it has to relieve some of that pressure before it can continue to move higher, right? Or it'll continue moving lower if it breaks certain structures. So coming into the new year, I was extremely bearish. I was bearish on the last day because some selling and profit taking had to happen, which we ended up catching on the last trading day of the year, which was here. And then we came in and we sold off massively. Right now, if we go to, I want to start off with a 4-hour time frame, and I just want to show you guys how I was looking for price to break below 16,763 for a confirmation break in market structure. So at this point, any bounce we get ideally is going to be a shorting opportunity where we're going to be looking for this gap to be filled. A lot of you guys hear me always mentioning gap ups, gap downs, and when we get gap ups because of the contract rollovers, now I don't know what platforms you guys are using, if you're able to see it how I'm able to see it, where on Thinkorswim I can go to all products, and when I go to all products on one particular instrument, I can see the current contracts and the contracts to follow, right? And as we can see, the contracts leading towards the end of the year are going to be higher than the current contracts. And we can see that it's over 300-point difference in the contracts from now to the ones towards the end of the year. The September contracts, the December contracts, right? They're all higher than the current contracts. So that means as we get towards the end of the year, the market is gonna start moving up, and we're gonna end up having gap ups and possibly maybe a repeat of what happened this year for the last 2 months of the year, where the market just kept just shooting up like a rocket, right? So for me, when I come on and I look at the 4 hours, like, okay, what the current contract is, what's the next one, and the next one I can see that it's about a 200 point difference. This is the June contract, and then when we get those gap ups and gap downs, I will look for those to get filled. But in the recent years, every time these gap ups happen, it takes maybe somewhere between a couple of weeks to a couple of months for it to fill. So next week we have CPI. Friday we have non-farm payroll. So these are very high economic data release that is going to affect the market, and specifically I'm looking for it to continue to the downside. Now going back to a 1 hour time frame, all right, we can see again we broke down. We came and retested this level, which I had off of the daily. So daily levels and 4 hour levels are respected tremendously. And if you guys are in the chat, you guys tend to see how Charting Queen every now and then mentions the 4 hour support or the 4 hour resistance, which she's more inclined to trade shorts on 4 hour resistance because those are stronger. So today I'm kind of beating myself in the ass because I should have been shorting, especially just seeing how price was acting last night. We had a little pop up at the 6 o'clock open, sideways consolidation to the downside, a slight pop that never exceeded the high of the 6 p.m. open, right? And then we started breaking down. And then once we broke below 659, that's a major area for me. So I should have been shorting today. Literally every pop should have been shorting, risking to the break of 659, which it hadn't broken above it. Then it started getting rejected below yesterday's low, which was right here. And so these are all different tools that should remove the bias, and I was being extremely biased due to the fact that we had sold off tremendously, and I just kept looking for the bounce when I should have just been shorting every pop, because we know at this current moment, we know based off of the 4 hour where we're heading. We're heading down to 16,088, right? This is our overall downside target. Now remember, Friday we have NFP, and then next week we have CPI. So, and then hearing the language that the feds were using today, as far as they feel that, oh, they might have done too much and da da da. So these are all things that are going to scare investors and potentially cause a further retracement in the markets. And as far as time frames, I'm not particularly a fan of the 1 minute time frame because it's just too much candles, too much back and forth. You can't really see too much direction. And for some of you guys, if that works for you for hyper scalping, great. 3 minute and 5 minute time frame I find are probably the lowest I will go, due to the fact that I just don't want to see too many candles printing, and I want to catch the overall movement. Which is why I pretty much just stick to the 15-minute time frame and the 1 hour. I will look at the 4 hour either early morning or at the end of the day, just to see what has transpired, and then come back down to the 1 hour time frame. Now we have been selling off for several days, so for the Asian London session we might get another bounce again and then continue selling off tomorrow and Friday. Is there any questions so far?
Yeah.
Go ahead.
So, based off I'm just gonna recap for today and yesterday, based off the 4 hour time frame.
Mm-hmm.
Primary short. I remember our session, we had talked about the 4 hours trend line,
Mm-hmm.
or the trend line that we drew.
Yeah.
And price literally, because I had the trend line on my chart, that's why I decided to swing most of my options. Like price returns that particular level, and on the 4 hours, all the EMAs were broken. Price was below V1, so why were you still kind of thinking to go long?
Why was I still kind of thinking going long? Because I was looking at the stochastic and I was just taking into account that the market had sold off tremendously, and there's still that whole bullish sentiment that I was looking for a potential bounce. I really was thinking that we could possibly bounce back up to the 16,800 area before continuing lower, but the market had a different opinion. So again, catching myself as to why I was being biased, and this is something that, as traders, it doesn't matter how many years you have in the market, whether it be 3 years, 5 years, 10 years, 20 years. There are times where we still succumb to those where moments where we become biased based off of previous movements in the market, and then we get caught. Luckily for me, even though I got stopped out several times today, it was still less than 1%, which is still pretty good. I was able to, keep my positions relatively small just because I knew in the back of my mind that I was counter trending and I was looking for something that wasn't there. And I was actually expecting the minutes to basically push the market up, and it didn't. So those were the reasons, but I was able to recognize, and just before it made a new low today, when it just looked like, okay, this thing was just going to continue down, I killed the trade at 16,590 90 something around here, 93, 94. So that was my bad on being biased. So when I came back in the afternoon and I'm looking at the charts, like, damn, there was no reason for me to be taking longs because the overall momentum is down. Because when we look at the 4 hour, going back to what I had told you guys at the beginning of, was it Tuesday? Once price closed below this level, market structure has broken. So this right here is like, okay, market structure has been broken. Every bounce we're getting is a short. The easiest trade is to the downside, and we can see that on the 4 hour time frame. We have a 200 EMA magnet, which lines up with a 16,412 area, which is a daily level that where we'll end up getting a bounce. So any bounce right now is going to be a short up until this level. And obviously, anytime we take trades, we still want to have a good risk to reward parameter, because there is still the off chance that we are going to be wrong, which in today's case, I was wrong. So at being wrong, maybe let's say once or twice out the month is not bad, because I still have about 19 or 20 something days out of the month that is positive, right? So today was relatively a small loss for me. I was glad that most of you guys were able to catch the shorts, and and ended up positive on the day. Does that answer your question?
Yeah,
Okay,
thank you.
you're welcome. So going back, so what we want to be able to do, and for a lot of you guys that are new, um, every day, so you want to be able to outline the highs and the lows of every day, and you want to trade around those, because those are most likely going to be areas of interest, right? So right here at this 16,522 is going to be an area of interest where if price breaks below it and stays below it, it's going to go lower. If price stays above this, high probability we could head back up to test a daily high. And if the previous daily highs are broken and held, high probability we're going to continue up to, let's say, a major area. So right here, if we were to break above this level, the prior daily high, which was 16,735, we could possibly see a bounce all the way up to actually probably up to the 860 area. So whenever you're wondering, when you take a long or a short, it's like, okay, well, where should be my first target? Well, if you were to enter into a long position here at the 522 area, you look left, and the first area that would stick out to me would be this long wick at 16,625. So that would be my first target, and then above that it would be these highs or these peaks that we see, right? So, and then going over on a 4 hour time frame, you want to use these as, you know, major support and resistance. So we had a major support here at the 766 area. So if we do, you know, get an aggressive bounce, it would be up to that level. And then if we get above that level on a higher time frame and we hold it, we could possibly head back up to the 17,000s to maybe create another lower high on a higher time frame and then continue down. But again, that is just pure speculation. So we have to come in every day, for the most part, try to be unbiased and just look at what the charts are telling us, right? Price action will tell you everything that you need to know. Again, not every strategy is going to work 100% of the time. And again, no strategy is 100% all the time as well. So everything that you do, you always want to have a solid risk parameter. And if you're trading and you're noticing that in a day, you know, you've taken 2 or 3 losses, at that point, you should probably substantially minimize your position or trade extremely small until you get the direction, unless you're able to, you know, decide and realize, okay, the market is going down, let me take shorts, right? But if you're not comfortable taking shorts at any particular level, you're better off just sitting on your hands, shutting down and walking away. Because one of the things that kills a lot of traders is the fact that it's the over trading. It's the wanting to recoup the money. Like if I would have sat here today, if I would have stayed on and I kept trying to recoup the money, I probably would have ended up losing more because again, I was so biased today, right? So at any point, if you find yourself being biased, you want to take a few steps back and you want to go over like, okay, what was I doing when I was winning? Okay, I was coming in today. In the day, I wasn't biased. I looked at the price action. I looked at the candles. I see, okay, double bottoms, double tops. Like right here, this was a massive rejection, which is like, okay, the candle, this candle was deceiving. Was like, oh my, we might be continue going, but it never closed above the prior daily low, so which is still a bearish indication, right? And if you have too many strategies or information in your head that you're using, sometimes they will conflict with one another. So it's like, how do you decide which method or strategy to go? And if you have methods and strategies that kind of align with each other, go with that. What I say when it comes to trading is it's like a democracy, majority rules. The more things that you have saying it's a long, it's high probability going to be a long. The more things you have saying it's a short, the more high probability is that it's a short. Where did 642 come from? Just your previous level. Yeah, the 16,415 level. That's let me maximize this. Go to a daily. Right here. So this level right here, this is where I got the 416 from. And, you know, and again, if we go to a daily, I mean, we've had consecutive days of red, right? And yesterday was a nice volume candle. Today was a nice volume candle. Tomorrow, again, even if we were to bounce up to the 740s or 760 area, these are all going to be shorts because there's a massive wall right here at 16,757 area. And again, now that we've started to make our way down, we should be heading down to fill this gap. So we're looking at about another 300 point movement to the downside on NQ. And if it pops up to the 6 and change area, it's going to be even more points to the downside. So for those of you guys that particularly like trading options, you would be looking at the triple Qs, right? If I pull up the triple Qs, it's almost going to have the same chart as NQ. So right here, triple Qs, several days of selling off, and where we would be looking for the triple Qs to come down to would probably be around here. So we're looking at,
376
what is
or
it?
376.
378 to be exact.
Yeah, I
Around.
remember. Yeah, looking at my chart today, I discussed that with Abby, and that is like on a daily. I am looking at that level, and I was telling her I'll be buying some long term, maybe for March puts, so I can give time for the puts to really play out. But you're correct on that.
Yeah, I mean, remember next week we have CPI, and I think CPI is going to drag the market even lower. Just seeing the current momentum now, unless was it tomorrow's Thursday, Friday? So unless by Friday we fill that gap, right? So if by Friday we fill this gap, which again 300-point movement to the downside. I mean, today the market was down 170 something points. Yesterday was like 300 something points. So we could very well touch this level by Friday, which then means that possibly next week for CPI we could see a nice movement up. Again, this is just all speculation, all up in the air, but we'll see what happens when the time comes and how the rest of the week unfolds. Do you guys have any questions so far?
I do have a question.
Mm-hmm.
I wanted to ask you, do you also play options or do you just do futures?
I do options. When I see an opportunity, I do trade options when I see an opportunity. Like specifically, I like to do Tesla, Nvidia, Meta. So the blue chips, I will trade the blue chips. I will trade the blue chips on the option side because I don't particularly want to do the shares, right? The
Right.
shares can be extremely expensive. So I do options when I see an opportunity. But for the options that I do, it's usually like a couple months out. It's never within the same day. Sometimes I might do a weekly if I see momentum is really going in that direction. But for the most part, yeah, I'm not doing dailies. The shortest I'll probably do is a weekly, but I prefer monthly. So like for example, if you wanted to trade, let's say Tesla, right? And when it comes to options, generally you want to be able to give yourself some time for things to work in your favor. So when it comes for me to trading options, I focus on the 4 hour, 1 hour, and daily. So for Tesla, if we go out to a daily time frame, this out the way. Okay. Right, so you can see Tesla on a daily level. I have my levels marked off. If I go out to a 10-year, you can see I have all sorts of levels marked off on Tesla where I know if Tesla's above this 184, it's a buy. And I'm looking for this 278, which it came down to. Once we broke below the 278, we're most likely heading back down to the 184. So I'll play puts on that. Or if I buy a couple hundred shares, what I can do is I can sell calls, right? Collect the premium, and then as it drops, I make money. So there's a lot of different ways to play options, which I'm very familiar with. My only issue with option is I hate the fact that institutions are able to get out before us retail traders. So I hate those disadvantages and lack of control. Not that I'm a control freak, but I like being in control of, if I want to exit right now, I can exit. Right, like right now the futures market is trading, and I can actually do option trades of the futures: Nasdaq, ES, oil, gold, natural gas. So all these instruments, I can do options trades of them. They tend to be a little bit more expensive than some equity options, but yeah, for me, options is I start off on the daily, I work my way down to the 4 hour and then the 1 hour, and then I'll use either the 30-minute or the 15-minute for execution entries. And I'm
So,
usually doing weeklies and monthlies.
okay, so I wanted to ask you, I don't do options at all, but I'm curious, like when you buy such a long-term option, isn't there time decay? And like what kind of target are you looking for? Like a few points, 10 points? Like how do you like manage the time decay with the profit?
So
I,
to manage the time decay, so on Thinkorswim there is a function that can show you there's like an option calculator. So for me, all right, so let me use Tesla for example, right? Let me go back to Tesla. All right. So Tesla, for example, let's go to a daily time frame. Let's maximize. So here we have a daily, and let's go to a weekly, right? On a weekly, we closed below this 78. So here, let's say I caught this the beginning of the week, right? I caught it at the 251. At 251, I would be looking for what when we're in the beginning of January. So I would do to like February, beginning of February, and I would go out of the money. So if it's at 251, I would be doing February 230 calls. So I'll go 10 points out, 10 to 20 points outside of the money, which those contracts are still relatively inexpensive, right? Because I'm buying them while price is at 51. And in the last few days, I would have been up on those contracts somewhere between maybe 2 to maybe 250 points. I'm sorry, percent, because it's in the 30s and we're nowhere near halfway through the month, right? So if this continues on this trajectory, by let's say by this week, we could see Tesla at $31. So the thing is trying to get the timing as far as it's something that you want to trade something that moves relatively well, and you have an understanding of how it can move during good market conditions and bad market conditions. Tesla, we know it can move 10 to 15 points in a day, 20 points in a day. So buying a call or a put slightly outside of the money when you're knowing that this thing is probably going to come all the way back down to the 200s. Now, once let's say by the end of the week, it's at that 30 level, those contracts are going to be extremely wanted, right? And then the further it goes out, it goes beyond that 230 strike, the more profits you're going to make. So, which again is why I always prefer to do monthly puts and calls, or even again weekly if I know that like this whole week is just going to be a massive red week based off of profit taking and whatever other sentiment that's being projected into the markets. And you can only come up with these thesis by keeping a thumb on the pulse of what's going on globally and what's going on within the economy, right? There's a lot of geopolitical tensions. There's so many different issues going on. There's wars going abroad. China is restricting certain things, or certain countries are restricting Chinese companies, which then that's going to cause China to do the same thing. So there's going to be a lot of tit for tat going on. So, which is why I was perceiving that at least the first quarter of the year, we were going to have red days, a lot of red days. Does that answer your question?
yes, thank you, Caesar. One more thing I want
Mm-hmm.
to ask you. That 278 level that you've marked over there, is that based on the last peak or the pivot high?
1 second. Let me go to weekly. So,
Is that why you took the trade on at this level when it rejected twice?
actually no. This level I had gotten it from here. So this is a daily level. So on the daily time frame, this was a level of interest where if price breaks below this level, it comes down. And right here, same thing on a daily level. 184 was very significant. I mean, I can recall when Tesla was all the way down to the $100 mark. I had the 100 even mark, which we didn't end up hitting. Right, yeah. So like the 100 mark, like we literally came a few cents away from it. And then I had another chart where I had the 125s marked. And as soon as price got above this, I was like, okay, we're gonna head back to the 200s. We came and we hit the 200s. We pulled back, created a higher low, and then we just made a straight run to the 278s. So right now, where we're at, we're most likely going to possibly come back and retest this. So at the very least, retest the 200 area. And again, with me mentioning the fact that we have China that's going to be mobilizing against Taiwan this year, that is going to affect the chip market substantially. For you guys that don't follow these supply things and these economic situations, the reason Taiwan is so important is because Taiwan, they were able to figure out a way to coat the chips that no other company has been able to replicate, right? So the need for them is tremendous, to the point why the Biden administration flat out stated that if China was to go after Taiwan, that they would protect them militarily, because Western countries and countries in general need those chips that are being produced in Taiwan. And if Taiwan falls under the fold of China, China is now going to be in control of the chip supply. And guess what? China has issues with the US, but it's just like it's like a behind the door issues, right? So in social in the media or out in public, like, they'll be diplomatic and civil with one another, but behind doors, like, they're both trying to somewhat cause each other's downfall, right? So once that happens, I mean, we're going to have a massive drop in chip companies. Another company that actually probably would be a good buy is NIO, NIO, right? NIO. Yeah, NIO is a Chinese competitor to Tesla. And I mean, in comparison to the price of Tesla versus NIO, much better. So there's a lot of different ways to play. I mean, you can play this either via the shares, or you could play it via options. You can go a couple months out, a year out. Year out contracts are called leap year, right? So you're buying contracts for the next year, expecting price to be, much higher than what it is. For the most part, it ends up being a little bit cheaper. And it gives you almost a whole year to be correct on this. And if things starts to take off in a shorter time frame, the faster it gets above your strike price within a shorter time span, the more money you'll make.
That's awesome, Caesar. I appreciate it. Thank you so much.
You're welcome. You're welcome. So what do you currently trade right now?
Right now, just 10Q. I am practicing, like, well, I have been trying to pass my accounts, but there was one that I came close to, and I basically reached the target, and then I failed the next day. So
Did
I
you over
continued, and I
leverage?
passed one.
Did
I
you?
passed one. I
Uh-huh.
have one funded account now, and I'm trying to pass more. So right now I'm just doing NQ,
Mm-hmm.
but I'm like, like today I traded on simulation and I made $1,500. But I was too scared to touch my funded account, so I could only make like 450 on the funded.
Mm-hmm.
But I could have made that 1,500 on like NQ on the funded. But it's
Okay.
just scary thinking that I might lose the.
So being scared is gonna keep you from really progressing. Whenever you're scared, what you want to do is go trade the micros, right? If you're normally trading one mini, go and trade, 1 to 2 micros. 1 to 2 micros will make you $200 to $300 a day. If you catch the movements, like, don't sleep on the micros. The micros are very powerful as well, because it all comes down to numbers, right? 10 micros is one mini, right? So if you're normally trading with one mini, you can actually scale in incrementally to a position with the micros. And again, one micro, if one micro goes against you 40 points, it's only a $80 loss. That's something that you can recoup very easily once you catch the direction and you get confirmation, right? The biggest thing is just having that confirmation to see like, okay, where's price going to go? What is this instrument going to do? And once you have that figured out and you go with the trend, again, you're not gonna lose. So if you're funded, definitely trade that funded account. Definitely get it to the point where you can do a withdrawal, because there's just something that's indescribable. I can't really describe it, but like there's just something really amazing and like a switch that'll go off in you once you actually see profits that you've earned in the market hit your account. And I highly recommend, once you get a payout, take some of that money and go use it on yourself, whether it's go get your nails done or go out to eat or pay a bill. There's just something that clicks to where like now you're going to continuously want to repeat that, right? And if at any point you are, not certain about a trade but you still want to shoot your shot, go with one micro. One
Yeah,
micros.
I
uh
think I think that's great. Sorry, Caesar. I think I will take your advice, and I think I will, on my funded account, I'm going to do micros. I'm not going to use just regular NQ. I will
yeah.
start doing.
Yeah, so just trade the
And
micros, because you can trade the micros of NQES, and sometimes ES might be the better mover. Sometimes it might be the Dow. I'm gonna post another link because we have about 2 minutes left. I was only gonna do this for 30 minutes, but this is getting really good. So let me end this, and I'm gonna send another link in the chat. Okay, guys?
Sure.
Ryan. All right, Linda's in. Give a few more seconds, let the rest join. Okay. All right. Everyone's on. All right. So, can you hear me? Abby?
yes, Caesar.
All right.
Yes,
Cool.
I'm here. Yeah.
All right. So, another thing I wanna go over with you guys is what's up? What's up? What up, Brian? All right. So, what you want to do every day, is try to get a little bit better than the previous day, right? If every day you try to get at least 1% better, by the end of the year, you're going to see some amazing results in return. And how are some ways that we can, get better? Well, one, as I was mentioning earlier today, is maybe, sticking to your rules as far as not over trading, right? Every day that you fight the urge to overtrade is a win. Being able to work on your psyche is very, very important, because our emotions is definitely the thing that hurts us the most in the market, whether it It keeps us from making money because we're scared, or keeps us from making money because we're revenge trading. We're trying to make up losses, right? So every time that we put that pressure on ourselves, and when I say ourselves, like I've been there. So everything that I'm telling you guys is stuff that I've experienced throughout the years. It's something that, at times, like I used to put the pressure on myself, like, oh, I need to make 20, 30, 40, 50 grand this week. And I would start and I would get halfway there, and then I'll start over leveraging, and then boom, I would end up giving all that money back. And that came from me having, putting pressure on myself of wanting to make a certain amount. Come in each day. If all you can make out of the market is $50, that's a win. And that's a win that's going to add to tomorrow. It puts you in a better space, right? Because when we take those losses and we have FOMO, it's like the market's going to disappear, and the market's not going to disappear as long as we have civilization, right? So as you guys move forward, starting from this week, every day you want to try to improve, whether it's holding a position a little bit longer, whether it's, utilizing a strategy that is going to allow you to be in the trade a much longer. And again, for anyone that's scared to trade the minis, trade the micros. 1 to 2 micros a day, or even 3 micros. Well, you can average out $500-$600 a day on just micros alone. You just need to, like, you won't be able to do a quick 20 or 30 point scalp, as if you were to trade the minis. But if you trade the micros and you catch 50, if you catch a 50-point movement on NASDAQ on a micro on 2 micros, that's $200 right there. If you catch it on three micro contracts, that's $300 right there. And $300 a day, it adds up and it compounds. And I don't know, Abby, who you're funded with. I'm hoping or thinking maybe it's Apex. And if it's Apex, once you get over that threshold, right? Once you get over that initial threshold, there's no trailing drawdown like it is for the evaluation phase. For example, on a 100K account, you need to make 6 grand. For you to get your first payout after making after trading for 10 consecutive days, you have to get the account to 106,000, which then it'll allow you to take out $2,500 twice a month, which comes out to 5 grand a month, right? And for you to make that 6 grand, all you do is you take $6,000 and you can literally divide it by 10 days or 15 days or however many days you want to be able to do it. So let's say, we started a 100K account this week, and by the 7th day we passed it. Then we trade the 7 days, right? When we trade the 7 days and we get the 6K, once we get the 6K, we're able to take out 2,500. That leaves us with a $3,500 cushion in the account, right? So meaning we can lose, well, actually it would be like 3,400, because we can't allow the account to go down to $100,100. If it goes to that level, we lose the funded account. So by taking that $2,500 payout, we have $3,500 in cushion. We continue with the same method, right? It's rinse, wash, and repeat. $200 to $300, $400, $500, $600 a day, and we continue adding it up. If we're making $300 to $400 a day, that's an extra $9,000 a month. So if you're making if you end up making $9,000 for the next pay cycle, you're gonna have what? Was that like 12 grand in there that you can now withdraw another $2,500 from. So if you maintain that same method, you will maintain this account for years to come, and then you can use those proceeds to basically purchase more accounts, scale up to either 3 million or 6 million, whichever your heart's desire. But that comes with being meticulous, having a plan, and continuing. What I've personally done with my accounts is I started with one account. I grew the account where I had about a 30 to 35% in one account as I was taking out those monthly payments. And then I had another account where I had grown it within the 3 months. I had grown it to over 100% of the 100K. So even now, if I have like a horrible month, which I had a horrible month, was it November, where I didn't really perform that well, but I was still able to, take something out. So that's the beautiful thing that I love about Apex, is that once you get your funded account and you build a cushion, there's really no conceivable way of you losing the account unless you over leverage or over trade. And something that you guys might want to try to implement is maybe trading one contract at a time, whether it be the micro, whether it be the mini. And the dollar return is not important. It's more so of, are you following your trade plan and how many points are you making, right? A lot of times you guys, like, I ask people questions, it's not how much they made, it's how many points you caught. Because if you catch on ES, for example, you catch 10 points on ES 2 contracts, that's $1,000. If you catch 10 points on ES on 10 micros, that's $500, right? And because you're trading with the micros, it allows you to be able to either average down or average up, and thus either compounding your win or lowering your cost average to where once it goes back to your original entry, you're actually going to end up exiting in profits. So there's a lot of different methods that we can use when it comes to trading. You just have to be very meticulous about it. You have to actually write stuff down. You actually have to work on your personal self and keep a journal. Journaling is extremely important because you're able to backtrack if there's ever a point where you're not going with your basics, you're not doing the stuff that you normally do, and it's like, okay, well, why am I not making money? Well, okay, now I'm looking at 1 minute time frame. I've never looked at 1 minute time frame. Or now I'm using the Ichimuchi cloud because I saw something on YouTube. And what I will say is this: if it isn't broken, don't fix it. There's a lot of different strategies out there, and each strategy is going to coincide with different individuals based off of their personalities, based off of their wants, and based off of their risk tolerance. Some people have a high risk tolerance, other people don't, right? And if you plan on scaling up and having multiple accounts, if you start off with a 50K account, and let's say, for example, you can only psychologically trade a 50K account, but you want to get a 200, a 300K account, well, what you're going to do is you're going to have to link those two accounts together, and you're going to have to trade like you're trading the 50 and not the 300, right? For example, I have a student that they can only trade 25K accounts, and every time that they would try to trade a 200K account, psychologically, like, they weren't ready to see the fluctuation in P&L based off of the position size, and they would always end up cutting out too soon, right? Again, because of fear, and that caused them to lose the account. But then once figured out, okay, they're more comfortable trading a 25K account, so they got a 25K account, got a 200K account, linked it together, but they traded as if they were trading the 25K, and they were able to, over time pass the 200K account. But while they were working on passing the 200K account, they were getting payouts from the 25K account, right? So that might be something that some of you guys are maybe experiencing, that you would want to work towards and getting done, is understanding that maybe you're not quite ready to deal with the hold on a second. Okay, let's close this out.
Order filled.
Okay, that's me exiting out of a long position I was holding. All right. Yes, I do trade the London session. So those are things that you guys may want to try to implement and figure out, because sometimes it's not necessarily the strategy, it's ourselves, it's our mental state. And if you are going through something personally, don't trade, because you're at a very heightened emotional state. Just like if you're extremely happy, you don't necessarily want to trade, because again, you're anytime you're at the different spectrum of a high emotional state, whether if like you're extremely sad, you don't, or pissed off, you don't want to trade. If you're extremely happy, you don't want to trade, because you know you're literally thinking everything's sunshine and rainbows, and that may cause you to be a little overzealous, which then could cause you to crash, because you might take a oversized position that you weren't ready to handle and end up losing, and then just shifting everything over. So definitely work on little things to help, and any little thing helps, whether it's eating cleaner, whether it's being active, working out, going for walks, going outside barefoot and grounding yourself, whether it's sleeping early. There's so many different things that we can do as traders that, you know, you might think it's not going to help, but it will, because it ends up helping you to build good habits. Trading will expose your bad habits, right? And it will force you, if you really want longevity, to work on those bad habits, to fix them or replace them, and you know, and then just work on overall improvement. Every day we can improve, all across the board, and everything that we do on a personal side to some degree translates over to the trading side. Make sense?
Caesar, yeah, yeah, thanks for that. That was
Mhm.
good information. Um, I, I do want to ask you, on average, how many trades do you take every day?
Days like today, I limited myself to about 4 trades. On average, like days that we have really good volume and momentum, I mean, I might do 10 trades. Where I'm trading, so on a daily basis, I'm trading NQ, ES, oil, gold, natural gas. Some positions I might be long-term swings, so I'll have it in a separate account where I'll hold it until it hits the TP. Like at the current moment, I have a long position on natural gas, which I have like a 2K floating P&L right now, and I'm looking to close this above $3 a contract, right? And I can pull up NQ and show you guys, and you can see on the left hand side, like these are all the different things I trade. I don't trade the Bitcoin futures because it's too damn expensive, and I'm not really gonna it's like 63 grand for just one contract, which is absurd. um so these are all the different things that I trade. So from a daily level, you can see I have NQ marked up, different levels out. So some move slower. NQ, ZL, like ZL right now is currently open. This is soybean oil. I trade this as well. This is a much slower mover. And if someone wanted to trade their own personal capital, it's very inexpensive to trade one contract of this. I want to say it's under 1500. Let me double check. Not quite sure. Make sure I'm giving the right information. ZL. Okay. So ZL is under 2500 per contract. 2376. So there are different things that I trade. So one particular instrument, I might limit myself to maybe 2 or 3 trades for that one. But on a like, there's been times where I've probably done like 20 trades. And I know there are people out there that they say, oh, you have to limit yourself to 2 or 3. And I disagree with that, because again, different strokes for different folks, right? Everyone is different. Everyone has different things that resonates with them. Not everybody's going to be able to be a scalper or a day trader like me. There are some people that their edge is swing trading. Other people, it might be hyper scalping, where they're going at a very sizable position, and they're only taking away maybe 5 or 10 points on NQ or ES or the Dow. So I don't agree with people when they try to set limitations to individuals. Like, I can share my parameters, and then you can try to see if that's going to fit you or help you, maybe implement some of that to your current strategies or what you're using. Recently, I helped Yeah Buddy with the whole scaling in and scaling out, but scaling in and scaling out via the micros, because he was doing 5 and 10 minis, and it moves 5 points against him, he's cutting out. Because five minis on a 10-point movement, you're seeing $1,000 fluctuation. It's like, holy shit, right? That's a lot. So when you scale in with, let's say 20, or you do 10 micros at a time, 10 micros is the equivalence of 1 mini. So because he started scaling in, and he would be in like 40, 50, or 60 micros, which is the equivalence of 6 or 4 minis. Now he was able to allow the trade to work in his favor, right? A 5-point movement didn't scare him to stop him out. And this is where I say the minis are very powerful, because they offer you more control, because you're able to average in and average out of a position. So for people that are, scared and stuff like that, going with a mini to get the overall direction, which is stuff that, like I've stated in the beginning, where sometimes if I'm not sure of the direction, I'll go in 1-2 minis, micros. I'll go in 1 to 2 micros, and then once it confirms it for me, that's when I'll tack on 2, 3, 5, 10 minis. So normally my position is between 5 and 10 minis a position. And so we're talking 5 to 10 minis on the NQ, 5 to 10 minis on the ES, and 5 to 10 minis on the future on the Dow. And that's going across, and that's like per account. So I have the funded account, and then I have the actual capital with Trade that I'm trading simultaneously at the same time, right? So, and these are skill sets that are experiences that you'll get over time, right? By starting off with one and then adding, because sometimes NASDAQ is just not moving favorably, where it might be the Dow, it might be ES that's performing better, that's having an easier setup. So when you confine yourself to just one instrument, you're gonna be at the mercy of whether it's trending or doing something that day or not. So try, for anyone that trades NQ, take a gander at ES. ES, again, you can do the mini, it's MES, right? The micros. Trade the micros, build your confidence in there, see how it's performing. It does move a bit slower than NASDAQ, but at the end of the day, it's like you want to start adding some wins under your belt to graduate into the actual mini. Now, there are going to be days where the setup is just surefire, where there's no choice but to hit it with a mini and scale out, or again, instead of doing 1 mini, do 10 micros and then scale out half. It comes down to your initial take profit, close out half, and then move your stop loss to break even, or however you want to do it, where you can move your stop loss to break even or in profits, which that is a part that's we're never going to get perfect, because sometimes, like, I'll move my stop loss to break even, it'll come back, it'll stop me out. I don't get before I used to get upset, but then it got to a point where I just had to accept every decision I make in this market, whether it leads me to a profitable trade or to a losing trade, it's on me, right? I can't blame the market. I can't say, hey, like, oh, the market's after me, which there were times where I thought it was. And I'm gonna tell you guys, the market is not after us unless we're trading with billions of dollars or hundreds of millions of dollars. Then that's when we might become a target. But us trading a 200, a 300, 150K account, we're not a target for them. It's just our timing is off. So accountability and acceptance of whatever we decide to do, we have to accept the reward or the consequences. Sometimes I'll move my stop loss too soon. I'll get stopped out at break even. Sometimes I'll move my stop loss to in profits, and then I'll get stopped out. And I always used to get mad, like, damn, like, why did they come and do that? And then I would find myself chasing the trade again, where I would add it back on. Now I just took another loss, right? So once you make a decision, just stick with it. If you make the decision to cut out because you don't like what's happening, and you cut out and it goes your way, do not get upset at it, because at that current moment, you made the decision that you felt was best for you and your account. All right. As day traders, we are risk managers, we are risk assessors. So if we assess the risk at a particular moment and we just don't like it, it's better to be safe than sorry. Not losing money is better than not making money. All right. So if a day you don't trade and you didn't make no money, that's good. in comparison to you actually trading the setup, which is not an 8-1 setup, and losing. Yeah, follow Ryan. Oh, what's up, Ryan?
Hey, I'm trying to. I just finished some books on trading. Do you recommend any?
Trading books. Yeah. So, for are we talking for technical? Are we talking for the psychological aspect? What part of are you looking to improve on?
More technical because I read the Mental Game of Trading.
Mm-hmm.
So, if you know any technical books?
One of my favorites is I think it's The Visual Investor. That's a really good book to read. Another book for technicals, I mean, Naked Forex is really good. Naked Forex is really good because it covers the like the forex side of things. But I think it's the visuals, the Intelligent Investor. One sec, let me double check. Gotta check my PDF. Yeah, it's the Intelligent Investor.
Okay, awesome, thank you.
Yeah, you're welcome. So that's a really good book to read. I mean, in technicals, honestly, it comes down to price action. Something else that you would want to read is Supply and Demand Zone. Now, I have all these books in PDF. So if you want, shoot me an email and I'll dust the cobweb off my PDFs and I'll email you some of them.
That'd be awesome. Thank you so much.
You're welcome. So
Caesar, would you be able to share it with me too?
yeah. So any of you guys that want that book, just shoot me an email and sort of at rigonometrytrading.com and I'll share the PDF with you all.
Perfect, thank you.
You're welcome.
Hi, Caesar. I have a personal question that I know I am dealing with.
Mm-hmm.
And if I fix that, I hope I should fix it this year. Sometimes I'll be very right with my trade analysis,
Mm-hmm.
and I might be trading the trend. I'm already in profit, and I see like a target to exit. I will exit. My re-entry sometimes is so bad. And sometimes I scale out at the wrong zones. How can I fix that? I know that's like a personal problem.
Yes.
How I, or maybe it's something that you've experienced in the past.
I've experienced that. And I've experienced it where I've entered positions too soon. There was a moment in my career where I was OCD about getting out at a specific price, and I would end up allowing the trade to completely reverse against me. So what I can say to that is, for you, once you end like for the most part, but for the most part for you, usually by 9 a.m. you're already profitable on the day, right? And for you, what I would like you to personally start doing is, once you're up 1,000, 1,500 on the day, I want you to be so specific as to your entries. So like I want where you, so for example, right here, like if you had this 19 the 16 659 level as a re-entry short. Oh, I'm sorry, let me
You're sharing on
no, there we go. I'm sharing it right now. So whatever levels that you have for an entry to re-enter long or short, don't do it in the middle. So for example, if you had a level to the top side and you've already made money, let's say you already made money on this movement, if price doesn't hit your level, do not re-enter. If it goes without you, you have to start accepting the trade left the station without you, right? Because by you chasing, you're entering in the middle, and once you're entering trades in the middle of let's say a level or of a consolidation or in a range. So let's say from here to here's the range. If you enter a short or a long here in the middle, your chances of winning are probably 40 to 60. Like you have a 40% chance of losing and a 60% chance of winning because you're trading in the range. And once you're in the middle, if it does a 10 or 20 point pop against you, emotions are going to cause you to close out the trade before it goes in your direction. Or if it starts going in your direction, you might get out too soon. For you, I would personally say once you're profitable on a day, you need to be very specific as where you enter. Do not enter trades in the range because your percentage of winning is going to go dramatically down. Versus if you enter up here on a short, your chances of the trade going in your favor is going to, let's say, be a 90 to 10, right? So 10% you might lose, 90% you might win. If you're taking it in the middle, it's either a 50-50, which is not a great odds. I mean, at that point you might as well just be closing your eyes and entering positions, or it might be a 40 to 60. There's a 40% chance it might go in your favor, and there's a 60% chance it could move against you and stop you out. So you, more than anything, I want you to, like, once you're up 1,000 on a day, is walk away and come back the next day, at least until you've gotten multiple payouts. Once you've gotten multiple payouts, you're gonna see over time your entries are gonna get better and better. Now for me to better help you with this, I would have to get on with you and see your charts, where you're entering, and and basically ask you all these questions like, why did you enter here? What were you seeing that made you enter at this level? Why didn't you wait? And then it's like, okay, well, if you're anytime we exit a trade too soon, it's one of a few things. We're exiting a trade because we no longer know where it's going to go, or we're scared, or we've had enough profits. Those are the three reasons why we exit out of a trade. We're scared that we might lose, we no longer know where it's going to go, or we felt that we've made enough profits and it's fine. And do not try to catch the very bottom, and do not try to catch the very top. As traders, we're always going to leave money on the table. I'm telling you, this is the one industry where you can make $10,000 in a day and be pissed off that you left $2,000 on the table. It's like, bro, you made 10 grand. Like, what the hell do you have to be upset about? You made $4,000 in the day. So what? You left another 4,000 on the table. You at least caught half of it. You know what I mean? So once you start accepting these things and you stop chasing, you stop with the FOMO. And I know that you guys might see, this person or that person is making a ton of money, or they're consistent. Your day will come. You just have to stay in your lane, play your game, and don't worry about nobody else. And this is another reason why I prefer to talk in percentages than actual dollar amounts, because everyone's accounts is different. Several people in here might be trading with a 50K account. Some people might be trading with a 150 account, or a 300 or a 500 or 3 mil or 6 mil or 20 mil, right? Everyone has different size accounts. So it's impressive to see, yes, this person made 10 grand, this person made 50 grand, but it's like, bro, they made 50 grand on a 7-figure account. Percentage wise, it's not that great, versus, let's say, someone with a 10K account made $2,000. That's a much bigger percentage than the person that made 50 grand with a 7-figure account, if that makes sense.
Yes, thank you. And I think that's exactly what I've been suffering from. And I needed to talk about it openly so I can try to work on myself and try to better myself.
Yeah, that's what it comes down to, is just your
And
mental.
I'll be very happy to have you like trade while you're watching me doing this.
Nah, absolutely. Yeah, we'll definitely get on that. So You have great potential. I mean, all of you guys have immense potential. You just gotta have to get out of your own way and focus on you. And sometimes it's okay to come in and trade small. Like today, if I was trading, my normal 5, 10 contracts, like I would have been wrecked. It would have been, easily a 10, maybe 15 K loss today, right? I got stopped out several times. But because I was only doing 1 to 2 contracts, the loss is not that bad, right? It's something that's manageable, that's literally could be recouped in 1 or 2 trades. And that's how you guys want to look at it. When you're looking at your losses or what you're willing to risk, how long does it take you to make this money? I'm pretty sure everyone, whether you're trading 1 or 2 micros or 1 mini or 2 minis, it is very easy for us to make $200 to $300, or it's easy if you're not fearful of what can happen. And if you end up having to start over again, it's okay, because think about it. If you have a 50K account and you lose the 3,000, whatever, and you have to start over again, but it only costs you, let's say, maybe $200 or $300, losing $200 is better than losing $3,000 of your own money. And if you really think about it, if you are not disciplined and you actually lost your own money, it would actually be more than $2,500, or it would actually be more than $3,000, because there's no system set in place to stop you out, right? And this is what I love about these funding firms, is because they're forcing people to be disciplined. They're forcing people to use stop losses, to be meticulous. If you're not able to pass a funded account, is because you're not being meticulous and you're not being discipline, which that's something that even myself at times I suffer with, where sometimes I get overzealous and I'll over leverage, right? But unlike most people, I have multiple accounts that I can, double back to if in the event I lose 1 or 2 accounts. And in order for you to get multiple accounts, you have to get funded, get paid, use some of that money to get more accounts, and then, pay yourself, and then, diversify into different things. All of you guys have the capabilities of doing it. You just have to be meticulous, work on improving little things every single day, whether it's making sure that you journal every day, right? Journaling is very, very, very important. I cannot stress that enough. Eating right, drinking water, being, doing things that are actually going to raise your energy and stuff like that. Like, I'm back to going to bed early so I can continuously wake up for London. Like, I can't wake up for London if I'm going to bed at 12 at night. I might do it once or twice out the week, but I'm not going to have longevity in it. And as you guys can see, the London session has been hitting. I mean, since October, the London session has been the session to trade, where it's less manipulation. Now, again, you don't have to get up for that, because, again, you might have certain life commitments, children, spouses, 9 to 5, right? That keeps you busy, or another business you have to run. So trading the New York session, you just got to come in unbiased, look at the chart, find your areas, and then just look to trade. If you have a trade plan and the parameters don't meet it, don't trade it. Sit on your hands, go do something else, come back. Y'all with me?
Caesar, can I ask you something?
Yes.
So, I wanted to ask you, do you do Forex too, or no?
Yes, I do Forex. I do trade Forex as well. I love Forex, both on the personal side and on the funded side. I mean, as you guys know, I am part owner of a Forex funding firm, which does allow you to trade futures via CFDs. But I do trade Forex, and I've mentioned, the correlation between the markets and, let's say, Euro USD and GBP USD. If you look, the market sold off today, right? If I pull up Euro USD, which you can see here, look at what happened to Euro USD. Sold off. And it started selling off at 3 a.m. So look at 3 a.m., the London market opened, Euro USD sold off. Let's look at NASDAQ. Let's go back to 3 a.m. right here. 3 a.m., what happened? The market sold off. So the correlation between Euro USD and the indices is that when the dollar is strong, the markets are going to drop. We're talking Dow Jones, Nasdaq, ES. They're going to go down. So if the dollar is strong, Euro USD is going to go down because it's euro versus the dollar. So when the dollar is weak, euro goes up, the markets go up. GBP USD goes up. If the dollar is strong, GBP is going to go down, the market's going to go down, and Euro USD is also going to go down. So that's the correlation, which, my favorite pairs to trade are Euro USD, GBP USD. Euro USD is a very common pair. It's one of the most traded pairs out there. Then there's other ones like GBP JPY, USD JPY, which is the US dollar versus the Japanese yen. But yeah, I do also trade Forex. And for you to trade all these instruments, like if you want to understand that fundamental aspect of it, which I just explained, another is just straight up charting. I mean, let me pull up because we have about less than 3 minutes left. So let's see, Euro USD real quick, right? All right, so we ran up. You mark this high at midnight. If price cannot stay above this high, so this is the Asian high. If price can't stay above the Asian high, it's going to be a short. If anything, we wait. We can watch and wait for it to break below the Asian low. If it breaks below the Asian low, we know it's a short. So right here at the prior daily low, it broke the Asian low, dropped. Here was the retest for another short, and voila, you made your money. So price action is very important.
Do you pick a pair, like when you're trading on that particular day? Do you pick on based on something?
Yeah, so pairs that I trade, I have a few pairs that I particularly like to trade because of the way they move. There are pairs that are tradable, but they move so slow and I'm not a fan of it. So I like momentum, right? So as you notice, like I really do well when there's momentum. I don't really like the stagnant or back and forth, and some pairs are like that. Some pairs, I mean, it takes them hours to move and I'm not a fan of it. I don't want to sit here for hours babysitting something just to move, let's say, 2 points, right? Some pairs, in order for them to move 2 points, it might take 2 hours. That's ridiculous. I like stuff that move. So there's NZD, but like I said, for me, I would go off of like my 4-hour strategy. So I have a bunch of different strategies that I'll use for either Forex pairs or stocks. And so once I do my charting scan, where like I manually go through each individual pair that I particularly like to trade, and then I'll see what the chart is looking like. Some might be setting up for a long, some might be setting up for a short, and then I'll find the levels where I want to enter, and then I enter. Just know we have less than a minute. So I'll stay on for another 5 minutes. So if you have any questions,
Ask a question real quick.
send me the message in the chat and I'll answer it. Okay.
Thanks, Caesar.
You're welcome. Any questions, guys? Because we have less than a minute left. Just type it up in the chat. I'm gonna stay on for another 5 minutes and then call this one a day. So hopefully I've answered most of you guys' questions. There's some of you that are quiet, so I'm hoping that the questions are being asked. Thanks. Okay, Zoom has ended. All right, so you guys can hear me? Yes, you guys can hear me. All right, so what was your question, Charting Queen? When there is divergence between ES and IQ, how do you approach that? All right. So when there's divergence between NQ and ES, generally I will sideline it until the divergence changes, until they sync, right? So normally if ES and Dow Jones are both moving in one direction and the Nasdaq is moving in the opposite, high probability the Nasdaq is gonna end up catching up to them. So the Nasdaq would be the one I trade. So how I approach that is I'm looking at all three at the same time: Nasdaq, ES, and YM. So if I see that the better movers are ES and YM, I'll trade those, and I'll probably not trade NQ for that day. Or if ES and Dow are both moving to the upside, I'll look for an entry on NQ to be able for NQ to catch up to ES and the Dow. So two options: either wait for it to give you confirmation for a long or short, or sideline it. And also looking at the Dow as well. You don't have to trade it, but looking at the Dow as well will help you to determine the divergence between, like, okay, which direction is the market really trying to go? Because today, I mean, they were all down, right? ES was dropping. ES was in line with NQ, the Dow as well. I don't know why is ES. Yeah, same thing with the Dow, right? All came down. So there wasn't much divergence today. So usually divergence is just one of them is lying. I hope that answers your question. Let's see. Yes. Okay. Awesome. All right. 2 minutes left. So again, any questions, guys? Feel free to ask. Closed mouths don't get fed. I have been struggling with that because that was happening a lot. Yes, in December it was happening a lot, and that we can factor in the end of the year, rebalancing. I mean, there's so many different factors that will contribute to that. We won't be seeing that much divergence, at least until maybe the summertime. So we have a good 6 to 8 months where it's just going to be some really nice solid moves, and you know, we'll be able to catch a good portion of it. Will I be streaming tomorrow night? No. These sessions I'm going to be doing it just on Wednesdays, because I will be also doing it again on Sunday. So Sunday I will be doing, if there's no questions, I'll just be going over different charts, to analyzing different charts to find potential buy areas or sell areas, which then will give you guys a chance to, you know, ask questions like, okay, why am I marking that area off? Why am I, you know, looking to enter there, and so forth. So hopefully by seeing, you know, the process of how I start off on the daily, then I work my way down to the 4 hour, the 1 hour, and I find, you know, what looks favorable to me. And, you know, and you can start seeing the criteria, because again, a lot of different strategies, a lot of different methods. And, you know, with that, it'll be able to kind of help you. Okay, maybe that's how you should be going about it. Because at the end of the day, I mean, once you're done trading, how many of you guys are actually, you know, on your free time going through different charts, looking at, you know, what's happening, looking at, okay, what's setting up, and then, you know, even doing, you know, homework to, like, okay, what's going on around the world, like what type of current events is happening that I can potentially profit from, right? These are all things that if you really want to take this serious, you really have to do. I mean, I can tell you, like, there was a point in time where, like, literally every time you looked at me, I was either on a chart or I was on my phone with my head down, looking at charts. I mean, even when I'm on vacation, I'm looking at charts, right? Keeping up with the market so I don't miss anything, so I don't have to go back and, you know, and try to get in tune with the market. Because a lot of times if you take too long of a time away from the markets, you lose touch, where it's like, okay, you have to give yourself a couple of days to, you know, configure and get back in tune to be able to trade. So definitely stop putting in that time, because it'll show. Charting back testing, all these things are things that you can do to help improve your edge when it comes to trading. Do you use BTC to determine? No, I do not use BTC. BTC is not a determining factor when it comes to the markets, okay? At all. That is a complete animal all on its own. It does the movements ups and down of BTC does not affect the stock market. It only affects the crypto market, right? BTC is the big dog, Ethereum is the second one, then it's Litecoin. So those are like the blue chips of the crypto market. Doesn't affect. If anything, what happens in our markets, and and with interest rates, those are things that will affect crypto, right? Because cryptos, essentially, we're talking, it's technology, it's digital. So anything that has to do with the digital and the the technological side of the market will affect Bitcoin. It's not the other way around. All right. All right, guys. Well, thank you for joining. Let me see. Do you recommend setting a daily profit goal? Yes, I do. What I want to say to that is take whatever the profit target of whatever account size that you have selected and divide that into however many days you want to do. Now, I would go and say you have, let's say, 20 days in a trading month, okay? And some days might be better than others. Some days maybe not so much. So if you take, again, like, let's say 100K account, for example, the profit target is 6 grand. 6 grand, you divide that by 20, you literally have to just make $300 a day for 20 days. Some days, you might have a good day where you do 900. That puts you 3 days ahead. So whatever your target is, on average, we have about 20 trading days in a month. Divided by that, there's no need for you to put the pressure to get it done fast. And again, I've been a victim of this, where I put the pressure on myself to make a certain amount of money in a day, in a week, in a month. And every time I put that pressure on myself, I lose, right? Because I end up forcing trades. I end up not being as patient. And because of that, I end up losing either an account, or I end up giving a lot of capital back from personal account to the markets. So whatever your profit target is, divide that by 20. You don't have to do it in 7 days. If the conditions of the markets are favorable and you do it in 7 days or 10 days, great. But you don't have to put that pressure on yourself. Once you see that once you remove the pressure from yourself, it's going to make trading enjoyable. It's going to make it that much more easier and nonchalant, where if you make some money today, great. If you don't make some money today, it's still good. All right. That's the last question I'm answering for today. Sunday, I'm thinking between 11 a.m. or 12 p.m. I'll confirm on Friday. But everyone, thank you again for joining. I hope this was very beneficial to you guys. If so, leave a comment or subscribe to the channel, or shoot a tag or whatever, or shoot Deck a email, you know what I'm saying? Because this was completely free of charge, okay? Y'all already know. So, all right, let me see. How about 6 p.m.? I don't know, because that's when the market opens. I don't know. Maybe. I don't know. I'll say this. Maybe if more people start participating and, being active, I might offer some gems and some, some Sunday sessions. But I don't know, man. I can't be giving everything like that. So we'll see. I'll think about it. But time Sunday between either 11 a.m. or 12 p.m. Come on. I mean, so I don't know. Yeah, Doc, let them know, man. Let them know. You know what I'm saying? We need some shout outs. We need some follows. We need something, man. Y'all gotta let the men above know what's up. You know what I mean? If y'all want more, Talk to deck. All right, y'all. Peace out. Have a good evening. See you guys tomorrow, 9 a.m. Don't be late.